Move.
Good evening, everyone. My name is Pranay, and I lead brand and marketing at Pakka. On behalf of the entire team, I'd like to extend a very warm welcome to all of you to our quarterly one of financial year 25-26 investor call. And thank you for joining us today. I'll just start sharing the presentation. Sachin, please confirm if my screen is visible.
Yes, perfect. We can.
Great. So before we begin the presentation, please allow me to introduce the leadership team. Mr. Ved Krishna, who's leading the business overall. He's the business head. Ms. Nitika Suryavanshi, she's the finance head for the company. Mr. Shubham Tibrewal, he has joined in as food service business head. Mr. Rolando Yon, he's leading the America business, so he's America's business head. Mr. Satish Chamavelumani, who's donning multiple hats right now as US business head and leading innovations on interim basis. Mr. Sachin Srivastava, who is the legal and secretarial head. We also have Mr. Gautam Ghosh, who is the executive director and leading the overall CNG part of the business. So, just to set the tone for the session, we'd like to begin with a short video of our of something that we did during the Mahakumbh earlier this year. Chuck products were used at the world's largest religious gathering, the Mahakumbh festival, and I'll play the. Uh, just give me a second. I just confirm that the sound is shared. Okay. Yeah, Sachin, my screen is visible, right? Yeah. Sorry, there seems to be some issue. I'll just replay. डुबकी लेने आए हम डुबकी लेने आए खुद को भिगोने आए पापों को धोने आए कुंभ आया आया रे कुंभ आया बड़े साल के बाद पिया रे करे मेरा जिया रे लगा है कुंभ देखो देखो रे तुम देखो कैसे सारे कह सारे भक्ति में गुम देखो मेले में सबका मन खाने को गोरे लस्सी का चट छोले भटूरे प्लेट कटोरी जो पास तुम्हारे बने बगास से खास है सारे ऐसी खूबियों पे मत रखना रे कुछ भी चखना तुम चक में चखना रे कुछ भी चखना तुम चक में चखना रे चक की है बात अलग चक
रखना रे।
Pranay, you're muted.
Sorry. Hopefully you got to see the video. Sorry for the the lag which was there in the middle. So as you just saw, this was a pride milestone for our brand. Building on that, Chuck has also been adopted in other revered institutions and celebrations, including Mata Vaishno Devi Shrine Board, Mahakal Temple in Ujjain, Rath Yatra in Puri, ISKCON temples, and during the upcoming Ganesh Utsav in Maharashtra. So this growing acceptance reflects, Chuck's emergence as a trusted, sustainable choice in some of the most respected cultural and spiritual settings across India. With that, I'll hand over to Nitika, who will start taking us through the business performance of our India business. Nitika, over to you.
Thank you, Pranay. Greetings, everyone. Good to see you all again after this slightly unusual gap. Thank you for your patience and support as always. As we all know, we were delayed in the declaration of our consolidated financial statements for the financial year 24-25. This unavoidable delay was primarily due to the first-time external audit of our US subsidiary, Pakka Inc. Until FY 2024, we were doing this subject to internal management review, and the management certified financials were submitted for inclusions. The results were not audited because the host country does not require such compliances, and plus the size of the entity was not material in terms of exposure for the holding company. For March 25 cycle, the auditors have reviewed not just 1 year, but this has been reviewed retrospectively from March 22 onwards, which is to ensure compliances and accuracy. This required substantial paperwork, reconciliations, restatements, etc., etc. And this was to ensure that PACA INC's books are compliant with the Ind AS requirements in India. Further, there was an acquisition of PACA Guatemala, which is a step-down subsidiary for PACA Inc. And this required further a reconciliation of three accounting standards, Guatemala, US GAAP, and Ind AS. As a result, the originally planned financial closure date could not be adhered to. We successfully completed this with no qualification from the auditors. I'll start with Q1. Pranay, I request you to move to the next slide. For the results, Q1 FY 2025-26, the slides reflect all comparatives mostly in red, but that is because of a very positive development. As a part of Pakka family, you will be glad to know that we could start our scheduled shut for the expansion of paper machine 3 and the pulp mill. The pulp sales were stalled in April and May to be able to accumulate pulp for paper machine 1 and 2, and this was for a total of 14 days. Both paper machine 3 and the pulp mill are now operating. We did also experience a lower NSR, weaker than expected pickup, as has been across the industry. However, in our assessment, we are better placed than most of our peers and have been able to sail through this much better. For the PBT, the other income reduced primarily because of the FDs that were parked from the equity money that we were basically parking as in the FD. So the interest incomes dropped. The money is now being utilized for the project. The PBT reduction is primarily a trickle-down impact of the lower revenue. There is no specific incremental expense that I should be mentioning here. For the food services division, I mean, we could run wrap and carry, as you can see, is what I explained to you. In the food services division, we did see a slight welcome increase in the revenue quarter-on-quarter basis, though year-on basis, there was a slight drop. Next slide, please. Already explained. In terms of the consolidated results, the revenue saw an increase while the PBT dropped a little as we made more investments to the cause. I'll hand it over back to you, Pranay, for the next speaker.
Nitika, do you want to cover key ratios as well?
Oh, sure. Sorry. These are the key ratios. As you can see, we have taken an industry median as well, and this is primarily because we do not have a exact competition or a peer comparison for our industry. For reference, we have taken the companies that are engaged in sustainable packaging. The source of our data and comparison is Screener, and these are FY 24-25 numbers that have been uploaded on the app. ROCE and ROE both would carry an impact of the preferential equity that was raised, and debt to equity includes the working capital as well. I cover the banking updates here first. Sure. In terms of the banking updates, post our financial closure that I had mentioned to you during our last call, we have three banks wherein the financial closure has been completed. We have already received disbursement from Axis Bank. The other two banks are completing their internal compliance, and we should be able to have the disbursement soon. Plus, I would also want to highlight that 91.06% of equity shares of promoter groups have been released from the pledge, and the balance is also in process. There are just some technical glitches at the bank's end where these screens are not very clearly visible, but we are working towards it, and we should be able to have this done soon as well. Thank you. Handing over to you, Pranay.
Sure. Thank you, Nitika. Ved, if you would like to take over and guide us through, what overall we are trying to achieve in the coming quarter and the time.
Absolutely. Absolutely, Pranay. Thanks. Namaskar to all of you. And again, apologies, deep apologies for not being able to do the investor call last quarter. As Nitika explained, there was a lot of ruckus because of this consolidation, and we actually wanted to do it post-consolidation. But as some of you pointed out, we will not do this in the future. In case there are delays, we'll still do a standalone call. What we've also decided is that this time it's 3 days after our board meeting. We'll try and keep the investor calls within 1 day of the board meeting so that it's very fresh. And as soon as the results are released, we are kind of sharing things with you and also taking your guidance. And of course, we are excited about the times to come. Some of it Nitika has mentioned, and I'll update you further. Let's go ahead, Pranay. So we start with the dream, and I'm going to reiterate this because we haven't played the regular video, and some of you may be attending it for the first time. Yep. And this is a singular idea for Pakka, a cleaner planet. Everything we do is in service of this one idea. So the question becomes, how do we do it? And there are three basic ideas that we are pursuing for that. And it's all around scaling regenerative packaging. The first one is our traditional products, which is basically utilizing sugarcane-based paper for paper bags or wrap and carry division, as we call it. The second, of course, we've gotten into the food services. Chuck, like Pranay played the video, has gained momentum. We have huge plans. And of course, I'm very excited about Shubham stepping into the role of the business head from a board member. And I'm sure there'll be a lot of changes that you'll see in the coming few months. And of course, this is the big dream we are after. We are working on setting up PM4, which will be started in the next 6 to 8 months. And that'll be the first machine in the country that creates barrier-coated papers. And we will try and target various segments with that. So what is our big, hairy, audacious goal? I know we are infamous for this, but I'll still state it. The idea for 2030 is to produce 500,000 tons per year of material, which leads us to actually trying to create a global impact. We currently produce about 50,000. With this expansion, we'll become 100,000. With the Guatemala expansion, we'll become 250,000. And then we have to cover ground for another 250,000. And that's what we'll work towards. This will also lead at an average cost of $2,000 per ton to $1 billion in revenue. Currently, of course, we are hovering around 50 million. So that's a 20x growth. I know it is big and hairy and audacious, but of course, the team is very excited and we continue to work every day towards this one idea. Again, dropping down from there, what are our goals for this year, which is, I'm sure you are very keen on understanding that. So what we've started doing is that we have started enhancing focus and productivity for the carry segment. We have traditionally been in this segment for both pouches and bags, but there's a significant refocus that we are doing in terms of optimizing the products on every machine that we have, recreating numerous ideas to create more value for the customer, and in that domain, trying to make sure that the machines become more profitable as well. The second, I know you, as investors, you've been very focused on the food service segment, and we are as well. And of course, we'll continue to create value, and there is a significant plan that is in place. I know you've been asking for it, and Shubham will start presenting it right after me, I believe. We have an ongoing project right now. We have now commissioned a certain section of it, and we are working towards making sure that the project gets commissioned with barrier coated grades by the end of this financial year. Innovations has been something that has driven the company for a long time. We've had a few hiccups, but we are back on track. There's a lot of good things happening. Satish might present a few, and I will, of course, tackle a few as well. And there is many new things to come, including strong leadership in the domain. This has, of course, been something that has been in the anvil. We've been working hard on it, and Rolando will give you the current position. But there is a uh, certain amount of tweaking that we have done with the current Trumponomics, which has led to numerous opportunities. I'm going to actually talk about it a little bit in our next slide. So what are the changes that we are making? They are, again, in line with what we are trying to achieve. There are numerous changes that you may have heard about, and some you may not have. We are changing the leadership significantly. As you know, our managing director and business head for India, Jagdeep, has moved on. I have come back in to lead right now, at least in this critical period. I will be based in India, and we will make sure that we will overcome all the challenges that we have today. We have our board member Shubham, who's come into the management team, and he's going to lead the food services. And again, you'll get to know more about him and from him. Rolando, who has been leading the finance, now steps in to lead the Americas to make sure that the project goes through, so, as well as the commercial direction that we've taken there. And of course, there are many other changes that you'll keep getting to know as we go along. Nitika already mentioned this. I think it's a huge step. It has taken a while to think about who our long-term partners are going to be. And these three banks have stepped in. We are very excited about our partnership with them. And slowly things are coming into an action mode with them. And we are, again, very keen to build a strong relationship with these banks. Again, you'll get more details, but we have Juan Gabriel Mosquera, who's come in from Carvajal, which is a large Colombian company. He's going to be primarily based in India for the next 6-8 months, slowly and surely commercializing the delays that have happened in the flexibles. He is somebody who understands pulp and paper quite well, understands barrier coating quite well. So we are leaning heavily on him, and he's built a team to commercialize the flexible substrates, which we will again be announcing numerous tie-ups in the next couple of quarters that are in the making, and they're very exciting times for us. Of course, the other big one, which I'm sure Shubham will talk about, and we've been working hard on, is the delivery container. There's a lot of good things that have happened there, and in due course, you'll kind of learn more about them as well. Again, Nitika mentioned this. Part of the Jagrati project has been commissioned now. The machines are stabilizing as we speak. The PM3 is now has a much better pressing system, which basically means it'll produce more, as well as it will produce different and better grades that we can use for numerous applications. We've changed the pulping line more or less completely. And we have set up a part of the recovery boiler already so that that pulp can be consumed. And in the next phase, we will also expand the recovery when we set up the PM4 project. This is again a welcome news. I know Rolando will talk more about it. We have now got Rothschild, who is now leading our banking. They have extremely positive about the capital raise there. We already have a commitment from LATAM Capital for 25 million. I know Rolando will talk more about it. Trumponomics has meant that we have a huge opportunity, which we are now pursuing in order to nearshore numerous products, and we will work hard at making sure that that happens.
Thanks, Ved. Um, Satish, please guide us through the innovations updates.
Thank you, Pranay. Good evening, everybody. Um, Pranay, thanks. So we continue our great progress with flexible packaging. Our earlier grades, M3 and M1, are getting a lot of traction. So what we wanted to do is to stabilize the M3 performance so that we can launch a successful product in the market. So that is something that, as Ved mentioned, our team is super energized about. Juan Gabriel has come in to help us out on that. Um, it's a very welcome change that we all are super excited about. And the team ran a great pilot in London last month for NM development. This is going reasonably well, and we are looking to accelerate the development and complete a product that can go perform in the market. So this is expected to go through the fourth quarter. And as we have been informing everybody that our M1 has found a home for our first pilot for a tea pouch application. That is something that we are actively pushing, and in uh, this is on the anvil. This is in development already in terms of the pilot. We expect the pilot to continue to happen between Q3 and Q4 of this year. So flexibles is again this has become the heart of our innovations now, and we continue to push ahead. Pranay, you can move. Sorry. And on the food services side, as Ved mentioned, we are continuing to develop a complete delivery ecosystem, and which starts with the containers and the meal trays. On the delivery containers, our designs have taken um, fantastic progress, is how I would put it. We have changed the design from the earlier simple paper lid to a bagasse lid, which has a compostable glue underneath. And this has given us fantastic leak protection. Lots of tests that are being done, especially to optimize the glue. The team is working really hard, and we are very close to cracking and qualifying it. With that success, what we have started doing is to work on ideating for the meal trays. So these are delivery meal trays which will have multiple compartments, very well suited for Indian product applications. And the second major category in takeaway is clamshells. Um, Multiple product designs have been completed, multiple product qualifications have been completed. We are finishing up our final tests. We should see these products hitting the factory in the next month or so.
Thank you, Satish. I'll hand over to Shubham now to guide us through the food service business plan.
Good afternoon, everyone. It's nice to meet all of you, and I'm very much excited to join the Pakka management team and help grow the food service business and take it to the heights I truly believe it can reach. Maybe as a quick introduction about myself. So, as already mentioned, I was actually part of the Pakka board of directors as an independent director, and I have now joined since the 1st of July the management team. I have a previous experience in retail consumer businesses and a 10-year experience in private equity where I specialized in business turnarounds in Paris, France for over 10 years. And as I step into the food service businesses, it's not been very long, but I definitely see some key areas of growth where we can definitely push and grow rapidly. And we'll detail some of those opportunities later on. So just in terms of what the market currently looks like and how we see we'll take this forward, the market is very fragmented compared to when we started out. You guys have been, I think, part of the journey since the beginning, and we now have over 70 competitors in the market. So it has become very fragmented. Most of the competition in the market is smaller players, localized players with smaller investments and therefore some cost advantages. And in general, there is a general shift in consumer behavior where customers are moving from disposables to reusables. These are just broader trends that we are observing in the market. But all of these represent enormous opportunities for us that we can work with. So one of them being we can acquire capacity in the market, which is great for us as we look to grow. So that allows us to work with outside manufacturers, especially when we're doing product development, product testing, and even product expansion. We can go outside and get some capacity. We look to broaden the product mix because new customer segment categories have opened up with specific requirements, and we will be looking to servicing those. And there is a very, very large unexplored B2C opportunity. Currently, we are exploiting a small portion of it, but this is a much bigger play. So maybe just to explain the overall opportunity, right? The why this is such an exciting space for us to be in and why there is so much that can be done here. The overall food packaging market in India is approximately $6.3 billion. This is, of course, all materials. And clearly, plastic is the leading material which is being used with approximately 60% market share. Now, just the disposable tableware market in the 6 billion is around $425 million. Of course, as you may imagine, the biggest customer segment here is the HoReCa market, basically hotels, restaurants, and catering companies. And the document and the product which is mostly used are cups. So this is just to give you an idea of how this market opportunity, this 435 million, how does it break up across customer segments, so B2B versus retail, and where do we currently stand, and where do we see ourselves going towards over the next 3 to 4 years. So currently we have a roughly 1.5% market share, and we definitely see ourselves being the market leader, being the first mover in the country, and also the product innovator, capturing a good 10 to 15% market share, which would give us a very, very significant revenue opportunity of 600 plus crores. This is how this overall market breaks up in types of different product categories. As Satish already mentioned, you will see that the biggest, second biggest categories, plates were already present, but the second biggest category is delivery containers and clamshells. And those are products that we are launching over the next couple of months. And this is why we are also very optimistic about the coming quarters, is because this opens up a whole new market for us. So in the last couple of months, the business has seen some key wins, and that is also showing some positive trends that we will be able to work with. So one is we've won back some lost accounts. So these are some QSR accounts which we had previously lost to competitors. And what we realized is that customers are coming back to us because they recognize the quality of our products. So sometimes they may have changed for cost reasons, but eventually they end up coming because the product performance of the competition does not meet the requirements. We have found a new customer segment in religious institutions where we've seen tremendous success, as already mentioned. Another customer segment, which is very, very big, and we've only scratched the surface, is institutional catering. We have recently started working with Compass Foods and Sodexo. We have also started exploring the B2C market, where on the Q-commerce channel, which is basically Blinkit and Swiggy, we have increased our presence from around 30 cities to around 186 cities pan-India, and that has helped us double our revenue just on this segment. And on the B2B front, we have also done significant progress. We have opened 25 new cities, so the products are now present pan-India. In terms of the strategy going forward, the way we see we should be running the business and how we can help grow it. The first one is efficiency. We will continue to work on optimizing our production and leveraging the availability of outsourced facilities to meet the demand. Product innovation is definitely one of the big pillars of our growth. So as already mentioned, clamshells and delivery containers are in the pipeline already and will be launched very soon. And two other categories which are very exciting is beverage cups and cutlery. Lastly, on the sales front, on the B2B part, we are looking at horizontal and vertical growth. So horizontal growth, we'll be looking at expanding to new markets, new cities, and vertical growth is increasing our share of wallet in the cities where we are already present. We want to de-risk the business, which is today quite B2B focused, and leverage the B2C market, which represents great potential, which we are seeing thanks to our presence on Q-commerce. And we'll also be looking to expand our export business with the new products that we are launching, which are very much needed in these export markets, such as clamshells. Over to you, Pranay.
Thank you. Thanks, Shubham. Rolando, if you can start with the Americas business plan.
Thank you, Pranay, and good evening to all. So just a brief background about me. I joined Pakka last year as a group CFO, and as of August of this year, I'm heading the US and Americas business. I hold a finance and economics degree, postgraduate degrees in digital transformation, and a master's degree from Harvard University. Before joining Pakka, I was the CEO of San Diego Sugar Mill, who is actually one of the raw material providers or future raw material providers of Pakka, of Bagasse. I have over 20 years of experience at C-level roles in organizations such as Capgemini, where I was the CFO for Guatemala, and Fidelity Investments, where I was doing some investment banking in the US. Next slide, please, Pranay. In terms of updates, very exciting news. As Beth had mentioned previously, we are dividing the Kawok project in 3 different stages. The first stage is the molded products, and this is to basically take advantage of the opportunities we are seeing in the market right now, given Trumponomics. There's a huge demand for molded products in the US, and given the strategic location that we have chosen for our Americas manufacturing facility, which is Guatemala, that is near shore to the US, very low on tariffs at 10%, and very short lead times for logistics into the US. We're seeing a pretty nice opportunity to get into the set up a molded products facility in the next year. That's an investment of around $50 million. And we will be doing that by importing pulp. And in parallel, we're still working on our stage 2, which is to build a barrier-coated paper facility. That plan is to go live in 2028. It's a $265 million investment. In stage 3, we will be building for a flexible packaging facility. In terms of where we are, actually, very exciting news. We have partnered with Rothschild to support us during the equity raise. As you may remember, we had been working with Nomura Investment Bank. However, Nomura was very focused on U.S. private equity, and given the situation right now, we've seen U.S. private equity is kind of on hold. That's why we have now engaged with Rothschild, who is one of the largest investment banking firms in the world. And in Latin America, especially in the northern Latin America, that is Central America and Mexico, they have managed the largest M&A and equity raise deals over the past 5 years. So we are very excited with this collaboration with them. We are already making headways in the equity and debt raise. We have already $25 million under LOI. This is an investment fund from Panama. As you may know, Panama is the financial hub for Latin America. So we're very excited to be collaborating and getting ourselves funded from Panama. That opens a lot of doors for us. Currently, we're under a due diligence process, and once that due diligence is finished, we can go further into the debt or senior debt that may be needed for the project. Also, we have another $12 million in process of LOI. This is coming from investment fund, private equity funds here in Guatemala. So with these two and senior debt secured, we should be able to close those $50 million for the first stage. And again, our aim is to have the project live by June 2026. And with that, I hand it over back to Pranay. Thank you.
Thank you, Rolando.
I can go ahead, Pranay.
Yes, please.
So yeah, just our commitments for this quarter. Pranay, you can go on. So yeah, like you heard from Shubham, we'll continue to rationalize the food carry division. We are, of course, looking at many opportunities for outsourcing, but also optimizing our own production facility. Supply chain, as well as, sorry, that was for food carry. And now, because we've just kind of modified one of our machines and we are optimizing the products, food service, like I mentioned, there will be rationalization of products as well as supply chain. Again, we have almost finalized the new lead. Of course, Satish has been doing the interim work, and we will make sure that the lead is onboarded within this quarter. And there's already a clear roadmap for 25-26, and the team is working towards those goals. The Jagriti projects needs to be speeded up, and now that the financial closure has taken place, we are expecting the funds to flow in, and once they do, then we are working towards closing and commissioning the project within this financial year. Again, like Rolando mentioned, there is rationalization that we are doing with Trumponomics, and I saw there's more questions around that. We'll answer them as we hand it over to you. But basically, there is a huge opportunity that is coming our way with the Guatemala exposure, and we will like to capitalize on that. So yeah, those are our commitments for this quarter. We will, of course, update you in the next quarter too. So over to you, Pranay, and we can start with the questions. Thank you all again for attending.
Thank you, Ved. We'll now move on to question and answers. And to ensure that everyone gets a chance, and I can already see a lot of already a lot of you have questions, but I'll still lay down some instructions. So you can use the hand raise button on Teams on top to ask a question. I'll go sequentially, and when I announce your name, you can unmute and ask your question. Please keep your questions to a maximum of 2. It's a humble request so that everyone gets a chance to interact with the leadership. I'll start with the questions, and the first question is from Mr. Suchrit T. Patil, you can go ahead with your question.
Yes, good evening to the Pakka team, and my name is Sukrut Patil. I have two questions specifically, one for Mr. Ved Krishnan and one for Mrs. Suryavanshi. So, first to Mr. Krishnan, it is a forward-looking question. As Pakka expands globally and builds its regenerative packaging platforms, how are you planning the next big step, especially in using tech and partnerships to create new materials or circular systems? Is there a roadmap to make Pakka a global leader in compostable packaging, not just through exports, but by shaping standards and supply chains in key markets like US and Latin America? Yes.
Absolutely, that's a great question. Thanks, Sukrit. So fundamentally, we work on 8 different directions for innovations. 4 are product related and 4 are process related. And we look at not just bagasse, but we look beyond, which kind of connects to what you were talking about. The first part is on flexibles. So of course, the short term aim. So we work on things we want to take out in the next 1 or 2 years, and then we look at possibilities in the next 5 to 10 years. So those are the 2 stages we follow. So there is a whole roadmap for flexibles. Initially looking at a bagasse-based paper and coating on top. Then we are also looking at microbial fermentation, etc. I won't get into the technicalities, but how does nature do things and how do we adapt it in industry? The second is in the food services, like you heard from Shubham and from Satish, that there are certain products that are coming out this year, but there is a lot of work going beyond that. Then the third is in rigid packaging, which is like how do we change the ready-to-eat meals and how do we change the frozen meals? And the fourth is, of course, in the food carry segment. So, of course, short term, the idea is how do you improve the quality of paper-based bags? But then beyond that, how do you create new substrates? And then we also work on numerous industrial wastes, and that leads to waste valorization, but it also leads to finding new available fibers as well as different products like, say, whey protein that is wasted from the yogurt industry. So we try and see how we can polymerize that. The one criteria that we have is that it has to be over 100,000 tons a year so that we can meet the aims that we are trying to meet. We are also looking at other ideas in innovation, and it doesn't connect to your question, so I'll avoid that. But it's basically around green chemistry and ecology. So that's more process led innovation. So we are continuously looking at new products, expanding what we know and finding out what we don't know is the mantra that we follow for our innovation. I hope that satisfies your question.
Yes, fair enough. And just my follow-up and my final question is to Mrs. Suryavanshi. Uh, as you just now mentioned, as you invest across India and Guatemala, I just want to understand how do you decide to put capital, like between new plants or R&D and global partnerships? Is there a system that helps you balance short-term profits with long-term impact and a leadership goal? Can you just shed some color on that, please?
Of course, yes. Whenever we are looking at what we are investing in terms of expenses and in terms of capital investment, which will have long-term impact, we definitely look at the liquidity to be available for the operations and for, as in going forward, say a year and a half. And keeping that in mind, the new tie-ups in case if enhancement of working capital limits are required and internal accruals would definitely be split between the operational efficiency and the long-term investments. But yes, internal accruals is where we basically decide in terms of the ROI that will be available and how that has to be invested.
Okay, fair enough. So that's all from my side. I wish the entire team best of luck and looking forward to meet you in the next Q2.
Thank you, Suchit.
Thank you.
Mr. Paris, you can go ahead with your question.
Yeah, thank you for allowing this opportunity. My question is, this entire narrative in terms of our leadership has, switched over its head over the last 6 to 8 months, I think. I mean, starting with the head of innovation, going out, and then, somebody was again sort of appointed in that place, Dr. Sam, I believe, and then, he's also left, or, and then we are in the process of probably looking out for another innovation head. And then Mr. Jagdeep Hira having stepped down, and I believe he was the master of execution for us, and now, and don't take me in an offensive manner, but the arrows have been thrown in multiple directions, and I believe, the team is sort of short of backing those arrows, and each arrow is heading its own direction, but there has to be a adequate backup. So my question really is just to boil down to a single, piece, is that there are these two big projects. One is the Jagruti Ayodhya for now, and the Guatemala project. Now, Mr. Jagdeep having left, what is the plan in terms of the leadership first to man these departments and ensure? Because I believe execution is where the challenge lies, not the vision and the dreams that we see. That's definitely laid out quite well.
No, that's a great question, Paras. Thank you for asking that. So to spell it out one by one, number one, let me assure you, Pakka has extreme depth when it comes to team and people. You'll be surprised if you ever visited us. I would, in fact, request you to visit us if you can, and I'm sure Sachin will be organizing something soon. Maybe as soon as we start Project Jagrati in the next 6 8 months. So I think that'll be a good time for investors to come. What you'll notice is that the Pakka team has a lot of possibilities, and we continuously work on leadership development. So there is a whole, in fact, this week we have a women leadership program that is happening. Maybe Gautam can add more color to that. But basically, there are 20 women who have been identified across Pakka to build leadership for the future. But let me go one by one. Innovations, yeah, we had Dr. Ramji Subramanian, who was leading it for a couple of years. We found that the application was a little bit short of what we wanted. So we wanted somebody who was more application oriented. We found Dr. Samson, who came in. There was a challenge which we identified very quickly, which was, of course, that most of the innovation was happening in India, and he was based in US, which was one challenge, but we knew that. But the second challenge was that coming from large companies like LG Chemicals and also not having cellulose knowledge made it an impediment in understanding what we were doing. And we found at that expense and that kind of distance, we didn't want to further kind of extend that contract. So it was our call, not his, to kind of go ahead. Of course, there will be a new person coming in. We are in talks with the prospect, and we are hoping that we can introduce them in the next quarter or so. That said, nothing has stopped. So because again, like I talked about the team is extremely strong. We subdivided the team into 8 different areas where we innovate. It has gone on. Satish has been leading that. He's been coming back and forth to India, of course, doing many things online and keeping the ball rolling. So just so that you know, yes, I would not say that nothing gets hurt. Of course, like if a leadership change is there, there is a certain impediment that comes in, but it's nothing that major. Things have gone on. We have a great team in place. Juan Gabriel Mosquera has come in for flexibles. We have Pankaj Kherkar, who was in Germany. He has shifted again to India. Juan Gabriel is from Colombia. Pankaj Kherkar was in Germany for 6 8 years. He just came back and joined us. We have a young woman who's coming into heading our biopolymers. She's a master's from Columbia University in US. They're all in Bangalore again. We can take investors there at some point to the Bangalore lab. Um, the second is, of course, a huge one. Jagdeep has been suffering from with his health since COVID, and it had been back and forth. And he was finding, and we were finding that the speed of execution that we needed was becoming challenging for him. He remains a very, very dear friend of for all of us here. We have his complete support. So just so that you know, he will remain in connection with the project and help us as we build the project. But we knew that we needed a more active kind of action orientation right now. And that was the reason why I decided to shift back to India. And I definitely commit that till the project is up and running, I'll be around, and we will make sure that the leadership is also further developed. And as you see, we have new, active, effective leaders that are emerging. Shubham was part of the board. He knows Pakka for a while, and he's now stepped into a management role. So it's not somebody new. Rolando again, has been around with us, and then he stepped into the Americas role. So as you see, there is a lot of depth that we have, and you'll continue to see that. And again, we are driven by a singular mission, and that will continue whether we change or somebody moves in or out. That'll still
So
continue.
just to summarize this bit, uh, it would have been probably better, if a number two Jagdeep would have been developed having known the issue broadly. So that would have ensured smoother transition. But having said that, just to understand this first point bit, in place of Jagdeep, we are at the moment not coming in with a single again equivalent of Jagdeep for execution, or is it going to be Gabriel in that position, or is that position being part filled with couple of guys ensuring some specific things like Gabriel or and the Pankaj Khera you mentioned. So is there somebody stepping in place of Jagdeep at some point in time, or we will continue with you heading and some of the other guys helping you out get this Jagrati up and running?
Yeah, so let me give you a little more color on the depth. We have plant that is now being handled by Narendra Agarwal, and Narendra has been with us for 30 years. He is really a master of operations, so he's leading the plant and sorting the issues that are coming. We have Deepak Pandey, who's an old hand in projects, and he's the one who is kind of handling the Jagriti project. I have stepped in because I think at a time like this, we need stability. We want to make sure that the team knows that we are there together and we are moving. There will be, absolutely, I totally agree with you. There will be somebody who is going to lead India in the end. It is not going to be me. But that said, whatever it needs, till it needs, I'm around. But of course, we are hoping that in the next year, either somebody develops internally or we identify externally. So in case you have ideas, we are more than happy to explore, but not right now, in the next 6 to 9 months, for sure. Both the my names that you mentioned, and Pankaj and Juan, both are innovations, not production.
Understood. Okay. And just second query from me, and in terms of one is on the Jagruti and Guatemala both. Whilst on Guatemala, I understand the non-metallic product is anyways not there, and the head of innovation also probably still not there, and that will take some time. But my question is really on the Jagruti front, that we are moving ahead with this flexible, probably packaging project. So are we sort of comfortable and very, very clear in terms of possibility of commercializing this metallic packaging material that we can produce successfully and market it at a commercially lucrative level? Because my understanding is that it will not be cost comparative against the other products that is there. That is number one. But having said that, even if we are technically able to produce, and which I'm not sure, and which probably I would request you to respond on, whether we are very, very confident technically to manufacture grease-proof paper, which has not been again done in the history so far. So whether we are technically qualified, I mean, capable of producing, and especially on a commercial scale project, and if need be, at some point, if the flexible coated, packaging doesn't probably take off, either due to our technical capabilities, or if it's the market that where this cost competitiveness doesn't work for us, whether we are open to going down to the greaseproof paper path, and we'll be sort of comfortable producing a greaseproof paper at a commercially viable scale.
Yeah,
And
again,
this
great.
question applies both for actually Jagrati and Guatemala, because eventually it's the sort of same.
Yeah, so great questions. And I think in a way, Rolando kind of covered it in his slide, but I'll again give a little more understanding of that. So the base paper, there is a base paper that is created, which automatically is a grease-proof paper, because what happens is that you create a dense sheet which is non-porous with a certain kind of primer coating on it, which happens on the machine. So that's grease-proof just by standard kind of discipline. The machine we have taken is also suitable for that. The people who are providing the machines also have a lot of expertise in that. Juan Gabriel, who is now leading the flexibles, has a background also in understanding and building greaseproof grades. Sudhir, who leads our production, is also very well abreast with greaseproof. So that's a non-issue. But ideally, we don't want to stay with greaseproof. Yes, greaseproof is a market product. It can sell but it'll sell at $1,400 a ton, and that's something that doesn't add enough value to the customer or to us. So what you have to imagine is the three stages that Rolando actually provided. So greaseproof stage is very easy. You can start producing it in the next 6 to 8 months as soon as the machine starts. But when you look at flexible packaging, it's a whole range of solutions. Think of it as a barrier coated paper. Right now, think of all the things you as a consumer use, which has a thin polyethylene coating. Say a sugar sachet, a pan masala packet, oregano or a snack kind of small snack bag, etc., etc., which is already in paper. The only difference that needs to be made is to replace the polyethylene coating. So that's the first stage. So we can do that, and we can do that economically, especially at the scale which we are planning. The challenge remains of flexible packaging, which is for achieving the kind of moisture and the air barrier that is needed for a 12-month to 15-month shelf life product. So that's the big challenge that we've been tackling. Just so that you guys know, even last month we had a huge train, Shubham was in fact there for the trials in England. There was a certain amount of success, certain amount of learning that came from it. So that goes into another iteration of trials for that. But like we said before, and Satish mentioned that the metallized substrate can work. But yes, we are not planning to produce the metallized substrate in either of the plants. But there is a step-by-step process. So we can go from a $1,500 to a $3,000 to a $5,000 product. So that's the stages that is planned. In an ideal world, we would not be focused on greaseproof. We'll be focused on barrier coated papers. So that's the idea that we are pursuing the Jagriti project with.
Right. And so the 670 crore project that you mentioned there, that includes the coater machines that will be required for this purpose.
Yep.
And the 12-month process, which is required for this, for that, coated paper, that is still time. I mean, eventually at a commercial scale to be established, or will that be sort of established by the time commercial production begins from Jagriti?
No, I think that'll take some more time, especially the non-metallized grades that we are working on. There is a lot of learning that has happened in the last 6 months. I'll give you
I was
a
talking
simple
on the
example.
M3, the non-metallic anyways, I'm not referring to, but on the M3, which
Metallized
I
is
believe.
not a challenge. That we've already gone beyond 12. So that's not a challenge. But we can't metallize. So metallize at that scale doesn't work. You have to do it at a much smaller scale. So that we are doing right now. We are co-developing certain products in India with another mill, which again, hopefully you'll get to know soon. And then we will have our own products come in another 6-8 months.
Right. Okay, I'll come back in the queue. Thanks.
Thank you. Kashvi, you can go ahead with your question.
Yeah, thank you for the opportunity. So in Jagriti, given that we don't have coating machines for now for flexible, still the project cost was around 425 crores as hard cost, so excluding the coating machines out of 675 crores, while the remaining were some of the soft costs like interest during the construction period. So can you please let us know what exactly is the total project cost, that is the hard cost, and what will be the peak debt level that we can see in FY27? And also, has there been any cost escalations for Jagriti?
What was the second part of the question, Kashvi? For 27?
So what will be the peak debt level that we can expect in FY27?
Sure. Okay. So yeah, so in terms of the coater, it is included in the Jagriti project. I think maybe Nitika can dig out the exact figure. Maybe it's 36 crores is what I remember, Nitika. I don't know if you have it in front of you. So
I'll check in.
Yeah, yeah. So there is an offline quoter in the Jagrati project that is already there. Uh, we are still in the middle of because we've just have sort of finalized the bankers. So we are still kind of assessing. We are still working towards making sure that we try and continue with the current project cost. But I think give us another quarter if there are any escalations. We'll get to know within that time. Right now, the work is how do we do it within the 675 crores that is there. The peak debt level for this is around 440, right, Nitika, in terms of term loan? Yeah, so that will remain the
Yes.
same for 2027. Of course, the working capital, which is ongoing, is about 160. So I would say if you take both, it'll be about 600 crores as the peak debt level. But just like I presume you guys know this, but our working capital is typically seasonal. So it is kind of peaks in the sugar season around April, and then it starts going down.
Okay. Okay. And have you started any sales of M3 or tableware in US from India? And what is the response there considering the tariff situation, etc.? And so what is our plan of action from Indian exports to US?
Satish, do you want to take that?
Sure. So so there are two parts to this to this answer. The first one is on the not necessarily M3. M1 is something that we are piloting with a large converter that is going into a tea pouch application. We are continuing to make fantastic progress there. We should see some decent quantities going into sale, hopefully in the next 2 quarters. So that's on the M1 side. And on the molded fiber side, we have been getting in at least about a couple of containers a month over the last 2 months, and it continues to grow despite the Trumponomics, if you will. The cost of the increased cost of tariff has about 7.5 to 8% impact on the final sales figures. So that is something that we are avoiding by um, moving to a much more efficient supply chain to the coast. So this is something that we are very actively working on. We do believe that the 7.5% increase that we see on the final selling price, again, it's on the final selling price to the end consumer, is something that is becoming manageable. That's that's in the interim. As Rolanda has been saying, we are looking at a longer term solution of nearshoring closer to North America. This is going to be this has opened up lots of opportunities, right? The Trumponomics have opened up lots of opportunities for us, especially with the tariffs in the other countries and our strength of presence in Central America. We are looking at a much better long term. And in the interim, we are managing with even moving our outsourcing facilities closer to the coast. I hope that answers.
Yeah, okay. That was helpful. Thank you.
And just to
Thank
add,
you.
36 crore is the number for the quotas added.
Okay. Okay. Thanks.
Back to you, Pranay.
Thank you. Mr. Kaustav, you can go ahead with your question.
Yeah, hi. Thanks for taking my question. So I'm a little confused. Could you please explain what all products do you classify as flexible packaging? And what is the total investment which has been made, the CapEx, which has been made up to date on these products that you classify as flexible packaging? What is the total investment, incremental CapEx that's going to be made over the next 2-3 years on all these products that you classify as flexible packaging? And to sum it up, what is the fixed asset turnover or the revenues you can make on the total investment that is being made by y'all in flexible packaging, along with the margins that can be sustainable margins that can be made on these products?
Okay, great questions. Again, I'm glad you asked that, Kaustav. I'm sure others may also want that clarity. So typically in industry parlance, flexible packaging is something that is multi-layered packaging. So if you can imagine a potato chip bag, a cookie bag, a chocolate wrapper, etc., etc., etc. Anything that has a long shelf life, which is typically in the industry, it's upwards of 9 months, 9 months to 12 months to 18 months to even 2 years. So there are many products. Like if you open a bag of chips and taste it, you'll feel like it's been made today, like just an hour back. But if you look at the manufacturing date, it'll typically be 3 to 6 months at least. And that is the magic of packaging, right? Because it's keeping the air and moisture out. It's nitrogen flush, so there's nothing inside that is kind of harming it. And that's typically flexible packaging. The typical flexible packaging that we see as humankind today is 4 to 5 layers. It is typically like you'll see a shiny metal surface, which is for water barrier. There will be a base substrate like a polyethylene that may a hot melt kind of coating on it for making sure there is a adhesion that happens when it's heated, etc. So there's typically 4 to 5 layers, tie layers that are there in any structure, which also makes it non-compostable, non-recyclable, non-economical for a collector, rack picker, etc., etc., etc. So that's what Pakka is really trying to solve for the last few years. How do we make it both recyclable in the paper stream, which is 70 to 80% recycled, and along with that, make it compostable, curbside or home compostable, and make it toxic free, because these products, if it's consumed by a cow, a bird, etc., etc., it's going to really harm the marine life and the terrestrial life. That's our big kind of effort that we've been doing. When you say, what are we trying to do? So when I said there is a difference between flexible packaging and a barrier coated paper. So a barrier coated paper is typically 2 layers, and typically what you see in the when you use it as a customer, it'll be a paper plus a polyethylene layer. That's the typical structure of a barrier coated paper. Of course, there are many, many, many substrates in barrier coated papers as well. You can look at VCI coating, which is for anti-rust. You can look at numerous other substrates like silicon coating, which is for, like when you have a release paper, like a sticker paper, that's also a barrier coated paper. And there are many, like I can just name 100, right? So 100 applications there. So what we are saying is that we are going to, if we cannot meet the goal of flexible, we are going to land with various barrier coated applications that have a certain amount of moisture and air barrier, but they are not the 12, 15-month shelf life. Typically, a sugar sachet is a 3-month shelf life, or oregano or a red pepper sachet. So that's a typical difference, and they are more forgiving. They can take in a certain amount of moisture and air. The second part of your question is more tough for me right now, but I'm going to put in something there which hopefully Nitika will not be unhappy with. Uh, I would say we are definitely looking at an upwards of 30% EBITDA margins in any of the products that we are trying to work towards. We will definitely look towards, and that includes the barrier coated papers as well, right? We are not looking at a different margin. But the top line is very different, right? If you sell a product at $5,000 versus $3,000 or $2,500, that's the typical kind of difference that is there. So that's something that we have to continue working on and try to get results as we go along. So that's fundamentally where we are. I don't know if I answered your question. I think there's maybe one
Yeah,
part that I'm missing.
no,
Go ahead.
I think there was, so one point was, currently, is this flexible packaging project, is it still a project in R&D phase? Is there no investments currently being
Yeah, you
committed,
talked
is
about
it in the,
investments. Yeah.
or is it in the CWIP stage? When will it be? So a little bit of clarity over there.
Yeah. So what we've been doing is that we have been going asset light on this. We have a couple of customers. One, of course, is in the market. We have been working with about 3 or 4 other customers whose products you'll start seeing in the next few months. Those are all outsourced sites. So typically what we have done is that we've taken a certain structure of paper from Europe, that was similar to what we were trying to produce. And then we've started kind of doing these applications and putting them in the market. That also gives us a lot of, it's like an MVP, it gives us a lot of feedback on improvement. I'll tell you a simple example. We've been working with Mars, and Mars told us recently, have you done a fold test? We had no clue what fold test was, right? We said, what is that? So they said, oh, it all works well till you don't fold it and keep it under pressure. So we said, oh, we have to test that. I said, what is the standard? He said, there is no standard. Just do it. Just put in a certain 5 pound weight and leave it for half an hour and then test it again. So this is kind of a reiterative learning curve. So right now there is no capex. We have invested a lot on the R&D side. So we have our own kind of testing systems. We are now investing in a pilot coating system, etc., etc. There's a lot of work that has gone into outsourced testing, where the team ran a lot of different formulations last month. So I would say yes and no. It is beyond R&D, as in just on the table, but it is not yet at a proven level where I can tell Mars that can you use my product. That is
Okay, so
not yet there.
so M1, M3, these are not flexible
Those
packaging.
can, those can. Sorry. I'm
So
talking
that's
about
not flexible packaging,
non-flex.
is that? But that's not flexible
Very
packaging.
much flexible, very much flexible packaging. So those can meet the norms, but obviously as soon as you do outsourced paper, outsourced metallization, outsource coatings, you also, and small batch runs, you also end up with a certain cost. And as soon as you talk to a bigger company, that matters a lot. So smaller companies, more sustainability oriented companies are the ones we are working with right now. The bigger companies we'll really be able to tackle when we have the scale and the cost efficacy.
Okay, and just last question, if you don't mind, your last 2 quarters, you've been below 10% EBITDA margins. So could you walk us through, last 2 quarters, right? No, not including
No,
other income.
No, we've not been under EBITDA 10%
no,
yet.
no.
What are the EBITDA margins last 2 quarters, Nitika?
As in this quarter was about 16ish, but last quarter was around the same 20,
20
21.
something.
Yeah, yeah.
Yeah, am I
That's it.
looking
So just to
And
clarify
this,
what Nitika said before, there was a shutdown where we were upgrading the machines. So the impact of that 16% is coming from 15 days of shut, which results in a 5% differential straight away.
I explained on
So
the
we would
chat
have
as
been at
well.
21, 22 if the
Right.
15-day shut wasn't there.
Okay, cool. We'll chat more then about this. Thank you.
Thank you. Shubham, you wanted to add something?
No, sorry, that was a fat finger. I pushed on the button by mistake.
Okay. Okay, Shreni, you can go ahead with your question.
Yeah, thank you. Good evening. So my question is regarding the outer pouch of a tea bag. So what kind of offering is this, and what kind of a volumes and margins can we expect here? And could you please share the details about the costing here as well as the sellability?
I'll take that. Yeah, it's a little too early to understand um, the volumes. We are again, the application is pretty huge. We are running pilots with one converter who has presented the product to two customers. Again, because of confidentiality, we cannot reveal the names today. Both are in the US, and the initial indicator volumes are, again, it's pretty decent, is what I would want to say. And in order to minimize the again impact of tariffs, we are also looking at doing these conversions in the United States now. We should be able to give you much better figure in the next meetings. But I will guarantee you that there is a decent amount of margins that we are baking in because of the problem that we are trying to solve for the customer, um, both in terms of margin and price. Excuse me, both in terms of pricing and the cost. Both are well under control, is how I would want to put it. I don't know whether I could reveal the numbers today.
All right. And my second question is, what is happening in R&D team? And guide us through if we can see any materially new product offering in the next 9 to 12 months? And please talk us to more about if M3 is a sellable product for the US from India and how much premium is it to existing substrate?
Satish, you want to go ahead? You want me to address the first part?
Yeah, why don't you address the first part, with because that's a
Okay.
lot more exciting for you, and then I'll add the second part.
Yeah, so of course, innovation is something that we really value. So what we did was when we realized that there was a little bit of a flux that was happening in the company, we dug deep within the company, and we created 8 different teams that are working in the 8 different directions where we do R&D and innovations in, and the projects have gone on and gained momentum. So that said, there are at least 3 products that are in the horizon right now, and I'm definitely keeping my. So R&D is a whole, MVP, trial, error. We don't want to launch something that has not been tested by the customer. So it's a whole process where there is a back and forth that happens. We are at a very, very close stage for a couple of very interesting products. We want to make sure that they are significantly game changing for the customer. So of course we have our fingers crossed to be able to launch in the next within this quarter. That said, if by chance there is any kind of delays, it will still be within this year. That's for sure. So there are at least 3 products that are in the making right now, which are significantly different from what you and I get in the market as consumers. They will all kind of come into the fray in the next 6 months max, I would say. Hopefully some in this quarter. Satish.
On the second part, where what are the products that are getting exported from India, and what sort of a premium are we getting? Um, Currently, what we are exporting is our Chuck branded products, and there are a specific ethnic need that we are addressing today because our products are designed for very Indian applications, and these are finding home in some of the most prestigious religious institutions, such as I was sharing a video of Chuck plates being used at ISKCON, Washington, D.C. And we are finding lots of takers for our plates and bowls. As I mentioned, the average has been around 2 containers a month now, and this will see a slight uptick in the next few months for our existing products. Along with this, again, now that we have opened the market a little bit, we're also looking at launching our clamshells into the market. We had a great NRA, National Restaurant Association show in May, where we had presented our clamshells and the new delivery range, and that is our holy grail. We are trying to solve the delivery problem that exists, which is real. Um, and if you look at the price premium that these products command, in terms of, again, what is currently being used in non-compostable versus compostables, there is a good 2x is what I would say in the market. If a compostable product is available at 20 cents, the excuse me, the non-compostable is available at 20 cents, the compostable product is available at about 30 to 40 cents. So that's the market premium, but of course we are not selling at the market premium. Compared to the other manufacturers, because of our designs, we are still able to maintain our current price points, which are slightly elevated, about 10 to 20% higher than what other exporters slash even Chinese imports are bringing to the market.
And this was regarding M3, right? And not tableware,
Now, I mentioned tableware. That's what we
right?
are exporting now.
So what is regarding the M3 pricing premium as compared to existing?
So I can talk about M1, M3. We hit a small snag in the market, so we are continuing to work on optimizing M3. Not in terms of performance. There is a little certification that we had to get. Um, on M1, we are at about 5 to 10% more than that's where we have priced the products at, about 10% more than the conventional options, and it's been gladly accepted by our converters.
All right. Thank you.
You're welcome.
Thank you. Thank you. Mr. Hiren, you can go ahead with your question.
Yeah. Thank you. Thank you for giving me opportunity. And it is great to see you back in India to spend more time in India. So my first question is on the project Jagriti. So what I understand that because of the delay in the development of the flexible packaging, so now what we are targeting Jagriti capacity to be fully utilized by approximately in the March 2026, or it would be the phase-wise capacity utilization. So basically, would just want to know that when it would be reflected in the numbers. And for flexible packaging, are we targeting it within next 1 year, whether we would be utilizing this because flexible packaging has a high margin? So whether we are targeting it, Jagriti facility would be utilizing for flexible packaging in next 1 year time for either NM or this metallized.
Thanks so much. The Jagriti capacity, typically what happens in an operation like ours, the machines, the paste paper machines, they take a little while to optimize. So what happens is that we are going to start, the pulp mill is already started. So of course, in the next month or so, the pulp mill will be optimized. So it'll already be at a 200-ton production, which is the new capacity for the pulp line. The other part, the machine, typically in the first year, we take 60 to 70% capacity utilization. So for 26, 27, I would not go beyond that. And then it starts, optimizing at 80% and then goes and stabilizes at about 90%. So that's the typical curve that we see. So that is what I would assume that will happen. Of course, we'll continue to try and do as well as we can. So the way I would look at flexible packaging right now is that let's start with barrier coated papers and keep building. So of course, there'll be a lot of new formulations. What's happening in this world is that there is constant new development of formulations. I'll give you an example that we just experienced. There's a certain term called viscosity, which makes a big difference in the coating of the products that we are doing. And the viscosity that we were getting at our lab was at about 500. I don't remember the unit, but say 500 XYZ was the viscosity that we were getting. And then when we went for trials in England in a small pilot, because of the temperature, ambient temperature, the viscosity rose to 1500. So there are complications like that that we have to overcome. So it takes a little more time. Second thing that is happening, as you do, those of you who track sustainable packaging, you may realize that there's a lot of new substrates that are coming. I'm sure you guys are tracking Balrampur Chini. They are coming out with numerous PLA, but it's not just PLA, right? There's a numerous range of substrates, and we work very closely with them in the development side as well on how we can co-develop certain products. There's a whole PHA range, which is constantly evolving. The molecular lengths are totally different in a PHA, PHB, PHBV, etc., etc., etc. Then there is a numerous areas of nanocelluloses that we work with. Again, a lot of different structures there. So there is a lot of development that is happening, which is going to, and you hear about seaweed, that's another whole range of products. So we continue to engage with a lot of these kind of ideas. And the world is going to keep moving in the next 4 to 5 years. There's going to be new things that are going to happen. And that's the reason we've decided to go offline for our coating and not online. Because a simple viscosity change can, make the machine totally the product can be totally different, or the production system can be totally different. So it takes a little time to stabilize. So I would say we will start with a barrier coated grade. We will optimize that and continue to experiment with flexibles.
Okay, so but whether we have off-take agreements in place, or it would be based because capacity ramp up would take time, so we are going based on the capacity.
So for barrier coated papers, you don't need offtakes because all you're doing is replacing the polyethylene. So you need to basically continue to work with our current converters. Still, you can meet the price and the performance specs. You're fine. That said, it's a good idea. We can maybe take some trials in the next quarter to at least do some runnability kind of trials, but that's all it'll need. In terms of flexibles, we are building towards it. Every day there are conversations, but obviously the offtakes will only come when we are successful in performance as well as price. So we have to tackle both those things, which is a relatively intense and constant kind of evolution that happens.
Okay, and my second question is on the resizing of the project, Guatemala project. So, whether restructuring or resizing has been mainly because of the financing funding issue, or whether it is because of the delay in the development of the flexible package? Because what we understand that we were targeting the complete Guatemala facility to be earlier utilized for the complete flexible packaging and not for molded. Now we have changed that we are going in the stage by stage. First would be molded and then flexible. We are targeting now by 2028 because obviously as there is no funding, so obviously we will not be able to see in next 1 or 2 years any type of the full scale project in the Guatemala. So just wanted to understand the main reasons for behind the complete resizing.
Rolando?
Yeah, thank you, Ved. So I would say we are trying to capitalize on the opportunities, right? So right now we see a huge opportunity for us in the market for molded. And when thinking about the strategy to set ourselves up for success in the Americas, going in with molded products makes a lot of sense. This is something that we have given a lot of thought. On the funding side, we are gaining some traction, maybe not as fast as we would have hoped for at the beginning, but definitely we're getting some traction. I would not say that's the main reason we are delaying the project, but rather we are taking a more safe start approach to the project. I would say, where again we first set up the molded facility. We get all the logistics, all the commercial channels set up, and in the meantime, we continue with the equity raise and the setup of the larger facility for barrier coated. As my colleagues have stated, we are still developing or fine-tuning rather the flexibles. From that perspective, actually, also the timing is set up so that when we are ready to go full scale with this product, the Guatemala facility is already being set up and running.
Yeah, because the concern was that because with very fast development of all the alternative technologies and nowadays in the R&D, so whenever we would be ready with the flexible packaging in 2028, it may happen that we should be also competitive based on the latest technology.
Yeah, that's correct.
Okay.
Thank you. We'll move on to the next question. Mr. Jeet, go ahead with your question.
Yeah, thank you for the opportunity. My first question is largely around Jagriti project and mainly around grease-proof paper. So just wanted, I'm dividing my question into 4 parts, two regarding production and two regarding sales. Have we done any trials on some paper machine with respect to how to make the greaseproof paper, its viability, its optimal quality, and all of that? And second is with respect to cost competitiveness. I think you mentioned in the past that we've done some study by a firm called AFRI, and over there they had mentioned that we are one of the lowest cost producers. And I think you referred that even with respect to PM4, that we'll be lowest cost producer. So do we have any cost advantages while we make a greaseproof paper from a PM4? So these two questions are around production. And on the sales side, like the previous participant asked, I mean, are we forcing any challenges in offtakes, or we are very sure that we'll be able to, sell the material outrightly? So that is one question. And number two, around NSR. So I think, Ved sir, I think you mentioned some $1,400, $1,500 per ton, which is largely around 120, 130 rupees a kilo. So have we seen any volatility or any downward pressure on the NSRs, which impacts the investment thesis, only considering greaseproof? So right now I'm not considering any flexible, but only looking at greaseproof. I mean, just did your stuff on, because we don't have Jagdeep right now. So what I understand is he was the one who was working on the machines, probably developed that grade of paper. So just wanted to understand the entire thing. So I'll ask my second question after you respond to this. Thanks.
You're a wise man. You asked four questions in your first question, but okay. We have deep love for you anyways, Jeet, so we will answer all of them. So just so that you know, I'll answer the last part first. Jagdeep is very much with us. He's not gone anywhere. It's just that he will not be actively involved. That said, he has a full commitment to make sure that PM4 runs well. So he's a very dear friend for all of us, but me for sure. And we know that he'll be standing with us all through. And that's you have his number. You can call him and ask him. That is very clear between us, that will remain. But that said, like I said in the beginning, Pakka has a huge depth. You visited us. I hope that you have enough confidence in the team that we have. In terms of GP, let's start one by one. The greaseproof paper, yes, we are fully confident because there is another company that uses our pulp every month to produce greaseproof paper and release paper. So it's exactly the same formulation. We'll just have a much more updated and a much better technology to be able to produce similar grades and better, I would say. Cost competitive, of course, because we have our own pulping. We have a advantage with energy costs that we produce our own energy. So with those two, there's always cost competitiveness that we have. Offtake for sure. In the beginning, the market tests you. We'll have our own challenges, of course, but that's part of the fun, that you kind of seed the market a little bit. You go back and forth. You make sure you'll have to obviously provide a much better price, etc., etc. In terms of the NSR, yes, the NSR currently in India is about 120, 130 rupees for greaseproof. We are, of course, still hoping not to sell any greaseproof because the market is overburdened already. A lot of people have entered this market in the last year even. We even sell greaseproof already to seed the market from an outsource side, even now. So we are selling to be able to understand, because customers are similar. But that said, people have decent capacity. They are already in the market. So we are still hoping that the edge that Pakka gets is the amount of work we've done in terms of the coating formulations. So if not flexible, let's start with the barrier coated grade. And that's the direction we will head. The greaseproof is under pressure in terms of the cost side. And that said, we will still make money at that price. But is it what Pakka is aiming for? The answer is no.
So just a follow-up to this, what is the difference between a barrier-coated paper and a greaseproof paper? Because what I assumed both of them to be the similar one, right? Or is there any difference in both of them? Not assuming flexibles. So just as a base paper, how different is a greaseproof versus a barrier-coated paper? Like you
Looks
just
like you
mentioned.
joined the call late today, Jeet. Anyways, we've talked a lot about this. Barrier coated paper is basically a paper coated with polyethylene, which is basically things like sugar sachets, oregano sachets, bag and box applications like different spices, etc., etc. So that's a much simpler grade. It doesn't need a 12, 15-month shelf life, and it doesn't need the same barrier coating. So that already exists. The only thing is that you are replacing it with a more sustainable substrate. So that's the idea that we will push. It is the similar customer base that we already have. They already use our paper. They just line it with polyethylene. We are going to try and provide a better structure with similar kind of pricing. Flexibles is, of course, a totally different ball game in terms of the shelf life and in terms of the barriers.
Understood. So thanks for the clarification. And my second question is around the Guatemala project. So I think the first step is a $50 million project, which is largely around 400, 500 crores, and starting with molded project. And over there, I think what I assume is that 10 million seed is from India, which has already been invested largely. We've invested some 8, 9 million right now. The balance is going to come from equity, which is 40 million is what you've mentioned. So what are the timelines that we are attaching over here, and at what dilution, what valuations, and when will the second stage of funding start? Because again, I mean, barrier coating is something we would have already known, right, in the next 6 to 8 months. So how far are we? How soon are we going to start with the second round of funding? Because the larger step up is going to come from the second round, which is barrier coated product. Yeah.
I would say that we have actually already started that. Whenever we're talking to the investor, we're not investors. We're not talking about only stage one. We're talking to them about the whole project, right? So the idea again, ultimately, our objective is to have that flexible packaging facility. That's our ultimate objective. Now we have broken down into 3 stages. And whenever we're talking to investors, we tell them about the 3 stages, right? So some investors are willing to come in at this first stage, and some other investors may be willing to come in at the second or third stage. But again, the same investors that are coming in stage 1 may be going into stage 2 and or 3. So it's something that's already happening as we speak to the investors.
And then can you give some idea around the valuations on something on that front, please?
Yeah, sure. That's a great question. So for the first stage, you had a question about dilution. So for the first stage, given the size of the project and what we have, Pakka has already put in, we don't expect a large dilution, at least in the first stage, because again, Pakka has already put some, and the financing structure that we're looking is probably going to be a lot more on second floor or mezzanine type of structuring, where there is not a lot of dilution for Pakka. Now, for the second and third, probably we will see more of a pure equity coming in, and dilution is to be negotiated at those stages. We're not there yet. But in terms of valuation, we are looking at somewhere around between 7 and 9x of the initial investment. That's when we compare against peers in the industry and their valuation in the U.S. stock market.
All right, I'll just wait for the next quarter. I think we'll have more clarity by then. I just wish the company all the best, because we've been attacked by all the concerns and negative news in the last 9 months. So I just hope the company is able to tide this smoothly. Thank you.
Thank you. Ms. Manali, you can go ahead with your question. Manali, you are there?
Husband already asked all the questions, so Manali is Jeet's wife.
Right. Okay, I'll move on to Vishal. Vishal, you can go ahead and ask your question.
Hi, good evening. So I guess a lot has been discussed about innovations and technicals. So I'll straight away shoot on the financials, because that's what I'm interested in. So I guess in 2022, the company had made a lot of predictions for sales and profits for every year. And I guess you must have considered or made some assumptions prior giving those figures. Could have been addition of new clients, or maybe existing clients increasing their orders, maybe 5-fold or something. But then, we've missed out on that. There's a lot of difference in our projections and the actual outcomes. So I just want to understand that we have the goal, we have the vision, but our execution has failed, or whether we like it or not. So as an investor, my question is that I would like to know the realistic projections for the next 3 years. That's question one. 26, 27, and 28.
I'll take it, Nitika. So yes, absolutely agreed. There was a certain plan in place to get to a certain number, and we are way below that number. We did try to do it inorganically. So the plan
Yes,
was
because
fundamentally,
as far as I am going through, a projected figure for 25, 26 was roughly around 2,500 crore of revenue and 500 crore of PAT. So we are much, much below that.
yeah. So let me address that. It wasn't 2,500, but still significantly higher than the current revenue. So the idea, the whole focus was to bring in the growth that was needed through the project that we are doing right now. And of course, the funding took a little time. The stabilization, the ordering, etc., has taken a little time. So it's been delayed. It's not derailed, but delayed. So the whole idea is that we want to achieve the barrier coated and the flexible grades in the next year or so. And that brings us back on track. The second objective, the second methodology for achieving the targets that you mentioned was the growth in food services. And that was mostly inorganic. And there has been a challenge with that. So I agree with you that there has been failure at our end in order to really get the outsourcing in place and to be able to rationalize the offerings. That is happening now. And also, of course, the market has been in a bit of a flux in terms of the bans that were supposed to come, etc., etc. But let's not blame the market at all, because in the end, we are responsible for whatever we commit to. So I would say, as Pakka, we are definitely delayed in reaching those numbers, but we still remain confident that it is a 2 year kind of delay. But we do plan to achieve those numbers in the next 2 years. So, of course, this year we will work towards making sure that the project is commissioned. So you see a significant impact in the year 2026-27. And then, of course, 27-28 is when we will actually hit the numbers that we were mentioning there. So yes, there is a delay for sure, and we take all responsibility for that. But we remain on track overall in terms of the plan.
Okay, so my question two is around question one. So as per the projections, we were supposed to be at 2,500 crore of revenue, but as of now, we are at less than 500 crore of revenue. So if we, are still focused on 2030 to be our target for achieving sales of $1 billion, that's about 9,000 crore. How are we going to do it? Because I think at the beginning of the presentation, you said that you're still focused in achieving these figures in 2030. So what has happened is we are lagging in the revenue, so we've got a lot of ground to cover. How do we do it?
Absolutely. I think great question, and we remain committed to that figure and that timeline. The way we are working towards it is, of course, to stabilize India. We want to make sure that the figures that you're talking about is a little bit different from my memory, but I'll check the numbers because you seem to be confident about those numbers. But that said, the idea is that if I talk in terms of tonnage first, India will reach about 100,000 tons by 27-ish, considering the 50,000 ton expansion. Guatemala is slated for about 150 tons, 150,000 tons, and that should be in place by 2028. What we have done is that the Guatemala site is planned as a mirror site. So the whole design has been made so that we can add in another line as soon as we have more bagasse. Second is we, of course, continue to hunt for more sites depending on our financial acumen and execution acumen. There may be other opportunities that may come our way. We are exploring a few even right now, which are bagasse led. The second part of that puzzle of 500,000 tons, or you can translate it to money, is that can we evolve and introduce fresher products? So that's the other idea that we are working on and co-developing a lot of these possibilities right now. And that will see the light of the day in the next couple of years again. So we remain focused on that number. We'll continue to work towards that. We definitely have a very clear visibility of half that number in the terms of about 250,000 tons is very clear. This is concrete, steel on the ground kind of an idea. The other 250,000 tons is still, I would say, it is a pie in the sky, but we obviously as a team are working towards it. And the aspiration comes from a singular idea: how do we make change, and how do we make change at scale? So yes, there are no absolute answers right now, but there's work that is happening in that direction.
Okay, just my final question is that, to achieve that figure, we would, since we are focusing more on the FMCG player and the food business, we would be needing somebody who's, substantially big like a Nestle, or maybe in India like an ITC or something. So I don't want you to disclose any names, but are we in talks with any of these players? You can keep the names
All
confidential.
the ones that you mentioned and more.
Okay, thank you.
Thank you. Manali has posted her question on chat, and because there is some issue with mic, she's asking what is the outcome for the further investment in Chuck project, quantum, kind of machines that we are going to order, given automatic machines troubled us in the past. What is the big picture over here as segment in Pakka Limited? You had indicated that there will be a fresh investment only if the segment can be big and profitable one, given there is an inflow of lot of cheap material from the competition. But at the same time, Chuck is an established brand. Her second question is, what is the status of delivery container? Is it going to be a profitable one? And also, Chuck losses have reduced in Q1, even with the shutdown. So what kind of quarterly run rate do we expect in the next 3 quarters? Any positive production tweaks did we make in Q1, which resulted in lower losses?
Shubham,
So
you wanna
with
go?
Yeah, I can take this one. Hi, Manali, thank you for your question. It's quite a detailed one, so I'll try to answer all parts of it. But I think on the whole, there is a lot of competition and it's cheap material competition, but in a lot of ways, it's actually good for us because it's helping us expand the market. It's helping taking this product category to customers we're not necessarily able to target. And Chuck being the most established brand, also the one with the best quality products and the leader in the category in terms of even innovation and benchmark in terms of quality and safety standards, it does give us an edge, right? So it makes the whole market bigger and it increases our opportunity to gain more market share. So we definitely see the arrival of competition as a positive. It says the market is growing, people are looking to enter it. Um, in terms of the delivery containers, uh, we are almost there. I think we are just in the process of finalizing the technology that we will be using to manufacture these because there is a lot of innovation here that we are doing, and it's really one of a kind, first time in the industry innovation. So all the processes need to be created. But we definitely see the product to be launched in the coming quarters, as Satish had already mentioned. And yes, of course, it is going to be a profitable one. It is the fact that the product will be leak proof. I think will give it a lot of edge. It'll be the first actually in the market, right? It will be leak proof and compostable. So I think that's really the USP there. Uh, and I think there's a question around investments on the equipment. Maybe Ved, you want to cover that?
Absolutely. Yeah, Manali, you have a great memory. From our side, we have been looking very deeply into the whole structure, not just our production, outsourced production. So two parts to this. So number one is, can we go asset light more and more? So Shubham and the team have now outsourced 3 sites, right, Shubham? Three sites. Yeah. So
Yeah.
now there are 3 sites, and as Shubham said, there is a significant traction that is happening through that in terms of the location, the kind of products that they will be made, and the distribution system for the supply chain. So the work is ongoing there. That said, of course, we want to work on our production and improving that. We've gone through a lot of possibilities there in terms of what is the technology available. After going, like, our team has gone literally around the world 2 times now to kind of find the right technology, and we don't remain confident in the technology available yet. So what we have done even in the last few days is that we are rebuilding the machines that we have. So what we realize is that technology hasn't moved to the level where we wanted, so we don't want to risk another failure there. So what we started doing was that the machines that were giving us trouble, let us try and rebuild those and restart kind of the production there. So we will continue to produce and increase our production organically while we outsource a certain number of products and build partnerships in the market. That said, we are very clear as a team that we will produce for sure. We will continue to produce and improve. We are working with a couple of suppliers to make sure that the technology evolves faster. In fact, we had some very interesting visits even the last quarter with some of the kind of front runners in the whole molded fiber technology space who have been around for 20 years. Now they are helping us sort some of the technology in-house. So there is a lot of things happening. Give us another, I would say another quarter, 3 months. I think by the time we meet next, we should have much more clarity on our own production. But that said, that is still not stopping us from building new products and new supply chains.
Thank you.
Pranay, just
Miss,
a time check for you, yeah? 8 minutes.
yes, please. Miss Khyati, you can go ahead with your questions.
Yeah, hello everyone. So my question is regarding the past performance. So like if we see on a quarter-on-quarter basis or on year-on-year basis, we can see around 15 to 11% of decline in the revenue. So any particular reason like which we can attribute, and also like if we compare entire FY25 with FY24, there is marginal increase in the revenue by around 1 crore. So, any particular reason in the past, like why we could not achieve any, significant growth in it?
You go ahead. Sorry.
No, I was just going to say Nitika. So you
Oh,
probably.
okay. So I think, Kathy, I explained this quarter on quarter is definitely the 14-day shut. I think in the past, it has, as Ved already explained, that yes, we are working towards making things better. In terms of revenue, we were affected by various factors that were affecting the industry. In terms of efficiency, we have been improving continuously, and that's what we are aiming for even going forward. This quarter, as we explained and I wrote on the chat as well, is an exception because of the shutdown. And we were not even selling pulp because we were holding that back for PM1 and PM2 for production. PM3 already was down and pulp also was affected. Ved, you want to add anything to this?
Nope, well covered.
Okay, got it. And any scope for like reduction in the overall expenses part so that, because we can see the overall EBITDA and all has gone down year on
Of
year.
course, that's what I exist for, right? So that is a continuous ongoing effort for sure.
Okay.
There's always
Thank you.
scope.
Absolutely.
Thank you. Mr. Shiv, I'll go with your question first.
Yes, sir. Thank you for opportunity. Sir, how do you plan to reduce the cost of flexible packaging from 35 square meter to 26 square meter, and how long will it take for you guys to do that?
Sorry, didn't get that question. 35 rupees a square meter? Is that what you mean?
Yes, sir. 35 per square meter.
I don't think that's the right price. Satish, do you remember the cost right now? 21-ish?
I
Is
don't want to
something
quote
that comes to my Yeah, I don't remember the price right now, but 35 is definitely not it. We are definitely way lower than that. We are at a hitting range of about, it is about 20 to 30% higher than the current substrates is where we are at. And we plan to reduce that by bringing it in-house. That said, there will always be a certain, I should say always, that's not a good statement. We'll keep working towards the right price point, but ultimately for us, it's not about price, it's about value creation. Can we provide the way Pakka works is ultimately go back to first principles, look at what the customer is looking for, build from that point. So ultimately, the customer is not looking for, even if though they say they want to just replace the product, that's really not the case. They're looking for an experience. The experience is holistic, right? There is a whole idea of a substrate, a conversion process, a packaging process, a branding process, like a printing and a aesthetic process, unpacking experience for their consumer. So we look at the whole chain and we see how we can add value in each of these areas. It also is like things like Shubham was talking about design. We also look at inventory. How can we reduce the customer's inventory by having a design that is so that you can have, like for example, the containers that we've created right now, the 750 ml and the 1000 ml has the same lid. The 500 ml and the 350 ml have the same lid. So the inventory reduces for the customer. How do you innovate the supply chain so that the customer doesn't hold inventory for over a week, for example? So it's a price, absolute price is, I think, ultimately something that is a low bar. We would always look at how do you create more value for the customer holistically rather than the price itself. But that said, coming back to your question, we're not at the 35 mark. We are lower than that. But that said, we'll continue to work at the price point as well. But beyond that, tearing a paper is way nicer than tearing a petroleum polymer. So we'll also look at the sound and the feel and everything else around that.
Okay, sir. My second question on are you planning to use third party pulp for Guatemala plant?
Sorry, didn't understand that again, Shiv. What did you say? Third
Are
party?
you are you planning to use third party pulp for Guatemala plant?
Yes, that's a great question. Initially, what Rolando presented, sorry, Rolando, I'm taking your question, but yes, so what has happened, and Rolando and I have both mentioned Trumponomics, and we are all witnessing these changes in the world. So it's very interesting because first there's a duty, and it is not just a tariff, but it's also an anti-dumping duty that came on China and Vietnam, then India, and then Thailand. And then there is also that 50% duty on Brazil. So Brazil is the biggest supplier of pulp, and we are in Guatemala, not as far as other places from Brazil. It's still quite far. It looks shorter than it is. It's a big continent. So yes, the idea initially is to go for outsourced pulp from Brazil and then move to our own pulp.
Uh, and sir,
Uh,
why are you pouring into value added when their margins will be the same as existing paper business?
I hope not. We will definitely want to create products with more margins. But the way Pakka works is the driving force remains the first part, which is a cleaner planet. So we tackle numerous products that others are not tackling. So we started with the idea of a styrofoam replacement or a thermocol replacement. So we built that business and we continue to build that business. The idea is that how do you get to a level where there is no styrofoam to be seen or no styrenes to be seen, because they are not just harmful for the planet, they are also harmful for marine and terrestrial and human health. So how do you work towards that? And of course, as we are a business, so we make sure that there is a margin. The second idea is that, and these are products that cannot be recycled, they cannot be reused, etc., etc., etc. So the second range is that of multi-layered substrates. Again, the same problem from health and planetary health perspective, and we are trying to solve that. But of course, in the business, we are in business, and the only way we can continue to sustain is to have margins. So we are, of course, hoping to create more value and generate more margins for all the products that we create. But the driving force remains scale and performance. So those are the two driving force, and we of course assume that the margins will come if we can crack those two.
Thank you, Shiv, for your questions. I think we have run out of time, and we'd like to close
you.
this call now. Thank you, everyone. Thank you, everyone, for your valuable time, and thank you to the leadership for staying on and answering the questions.
Yeah, and Pranay, just to add, in case you guys have some, I know there are a few hands still raised. We don't want you guys to wait till the next quarter or anything like that. We request you to send your questions to Sachin, and we'll make sure that in the next week they are answered if there is something we haven't answered on this call. So thank you all again for your trust on us. As we've said before, we will leave no stone unturned to make sure that we go towards the goals that we've committed to. Thank you so much.
Thank you.
Thank you, everybody.
Thank you so much.
Thank you, everyone.
Bye.
Thank you. Bye.